Welcome to thestockminer.com. I'm Brian Johnson, entering a new week of trading. It is options expiration week, which means be careful of your position sizes. Usually we see a lot of volatility during the course of this week. We did last options expiration week. We had some violent ups and some violent downs. It all happened right around this area here, so that'll give you an idea of what we may see coming into this week's trading. Keep in mind, Tuesday, the Fed does have something to say, which means that will be affecting the markets. So be careful coming into Tuesday afternoon with your positions and your trading sizes. We are right back in a trading range right here. Ultimately, looking for breaks below here and breaks above here. I'm not quite sure how to make it any more clear than that. That is really the areas to watch. I will tell you this, we are getting very extended up here. If we break now, the S&P and the NASDAQ have already broken above these highs. So if the Dow follows, it has not so far, but if the Dow follows, I would be very cautious. If you are a Dow trader and you like to follow the diamonds or whatever it is you follow and you're looking to take this thing long, I am really at this point, to be quite honest, I'm not even recommending a trade to the long side on the Dow. At this point, I would rather you just sit and wait and be sure that if we get any move above this, it's going to stick, because I'm not convinced it is. So if we get breaks over 11,450, yeah, your choice, your money, your account. Feel free to trade it long if you want to, but I would not want to be holding long overnight, and I would not, and I would be sure to be moving my stops up as soon as we got a break up over this 11,450 area. So watch that very, very carefully coming into the new week. I would just be very cautious up here. You can see we worked this area for a while back in November. We're working that same area now in December. I would expect that maybe we will see a tiny bit of a move up and above here. But as I said, I would not want to hold it long overnight. Dow daily, you can see we're trying to approach and get above this area here. We had a nice move up, a nice move sideways. That is a high base formation. And we had I guess a break of it. We did have a move to the upside. It is still bullish. And if we get above 11,450-ish, you can see that there might be a little bit left to go. But I think it's very little left to go. Then we see a pullback. Will the pullback be sideways? Will the pullback be a pull backwards? Anybody's guess. However, until we know exactly what we're in for, I would wait. I'd be very cautious with any long trades, especially holding overnight. I usually would warn you and will warn you that coming into options expiration week, things can change on a dime. You go to bed one night with what you think is a very comfortable long position, wake up the next morning and you're down 8-10 points on the S&P. Not uncommon to see that in this week of volatility. NASDAQ 60 minutes, same thing, right at this overhead high, looking for little pokes above that 2220-ish area. Opportunities may be there for some, I'd say some quick trades here to the upside, especially on the NASDAQ. It tends to be the stronger of the indices, so I would have less of a problem going long the NASDAQ than I would the Dow, that's for sure. But once again, getting very stretched up here, waiting and looking for that pullback. Pullback could take a couple days to come into play, might wait until after the Fed speaks on Tuesday. Point being, any long trades up here should be met with a lot of caution, same as what we saw back here. Warned caution all the way up. I'm warning the same thing over here at this juncture. NASDAQ weekly looking very good. This looks like a pretty clean 1, 2, 3, 4. This could finish a 5 sometime this week. Maybe this is somehow the top of wave 3. It's anybody's guess. Point being, it still looks pretty good up here to the bull side. For the weekly candles, keep in mind that you've got a week to wait to see where things go. This thing could drop all the way down to 2100 in the beginning of the week and be all the way up at 2250 by the end of the week, and it'll make the candle still look bullish even though during the middle of the week it looks extremely bearish. Always wait until these candles close. Doesn't matter where they go, matters where they close. So we will watch this closely, but as it is, just keep in mind, still very neutral to more bullish on the weeklies. SPX 60 minute, this thing's been parabolic. A lot of it, I think, coming from the financials. As you'll see when we get to FAS and FAZ, there's a pump going on. There's obviously more going on behind the scenes than what we know, and the banks are really the ones that are benefiting from this. Not all banks, but some of the banks are doing very, very well off this Fed pump. QE2, in my opinion, in full effect right here. So the S&P, holding the financials, benefits from that as we scream upwards on the S&P, way up above these areas, getting close to 1240, 1235, 1240 was my big caution area. This thing could reach, who knows, 1260, 1250, could go anywhere. I'm still going to warn you, be very cautious on any long trades that you take over the next few days, especially during these type of weeks with options expiration. Here we have the little push up and above this overhead area. We can call this another 1, 2, 3, 4, 5, could be, who knows where that could be. And we don't have to get there all at once. We could see, like I said, a little bit of a pullback before we see that move upwards. Point being, we are up above these overhead resistance levels, making for very nice support for the time being. We'll see if this week can follow through, but you saw that the volume was very decent last week. So things still looking pretty good for the bulls in this area, especially with QE2 pumping money into the markets. VIX Daily held out. Now remember that it was up on Friday and the markets were up on Friday, showing a divergence, but we've seen this before. We're really not all that concerned necessarily from 1 day's worth of divergences. We've seen this quite a bit in the past. Point being, we are still down below. Now we're below. Notice how this line held very, very well here. 1, 2, 3, 4, 5 times over here. It gap below, came back above, held, now it's back below again. Seems like it's losing weakness down here. As we come into Christmas, people tend to get, like I said, a lot more relaxed about the markets. I'd be very cautious. We will be watching the VIX very closely this next week. The volatility index tends to be a little bit more, how would we say, lively during these options expiration weeks for good reason. VIX Weekly, same thing. Still not a lot of panic in the markets as we fall and have room to the downside for sure. 16, 15, 50, somewhere down in this area. Still very achievable by the VIX. Apple 60-minute. I think we're in a little triangle here, waiting for a break one way or the other. I'd look for something maybe above that 321, 322 mark or back below 318 for any kind of entries for you traders in Apple. Daily, looking very good, still up above this 320 area. 320 was the area to break, and we broke it, put in a wick. Gapped above it, came back down, got above it, got below it, da-da-da, we're dancing around. 320 is the area you'll want to watch very closely. I still like the 322 for the long, 318 for the short, and as long as it stays up here, it's still bullish. It is Apple, it is Christmas. So wait for the break. We are due, and what I wouldn't actually mind seeing Apple pull back a little bit before we hit the Christmas rush, but Apple has a mind of its own. It will do what it wants to do. The markets might move down 1-2% over the next week, and Apple might go up 3%. It really does have a mind of its own when it comes to the markets itself. Just watch for the break. Take your entries then. FAS from December, this is what I'm talking about. QE2 in full effect. It doesn't get any more obvious to me than this right here. Just a constant scream to the upside by the financials, and you can see it doesn't look like it wants to stop anytime soon. I do expect it to slow down, maybe even pull back to this blue line. Those will be the areas I'll be looking for it to break coming into this week. And you can see we're right back up to the top near that 27 area. So if it's going to turn, this would be a good opportunity to see it do it. However, if I'm the Fed and I have all the money in the world at my disposal and I can print it in my backyard, I would just keep printing it and I would try to shove this thing above and close it above this overhead resistance area if at all possible. We'll see what kind of forces come into the markets. Push comes to shove, the markets can and will beat the government. They don't have as much money as what's out there for a lot of the investors. But if the investors don't step in and try to sell this thing into the rush to the upside, then the Fed can have their way. So very, very violent move to the upside. It's been very, very strong for those of you that have been playing this. I still think swing trading's been tough unless you catch it up over some of these moving averages like this one here, or up over the 200 have been some pretty darn good entries for you swing traders. Otherwise, intraday action has been very, very nice with the exception of this one red day. All you've ever had to do is go long at the beginning of the day on FAS, and you've been at least able to make a little bit of money, if not a lot of money, by the end of it. Keep in mind, right back up to the 27 area. FAZ really feeling the effects. Look at this thing just absolutely bleed out. Back below that $10 mark into the 990s. As you can see, it looks like it could bleed even further as we see it break this heavy, heavy line of support. Right here, we had entries below here, we had entries below here, we had entries below here, and we had entries below 10, 20, and $10, all leading to profits last week. Let's watch very carefully to see if we get any kind of a bounce in this FAZ or a break downwards in the FAS. If so, we're watching these levels to hold on any kind of a retest. That'll do it for today's video. I'll be back with you again tomorrow, watching for these breaks, being very careful to the long side, and we will see what the Fed has to say. They're not going to do anything. I mean, really, I don't know if there's much to say, to be quite honest. So still looking for, let's see what we get for an open tomorrow, but watching these levels in through here, and we'll see if these levels can hold by the end of Monday coming into Tuesday. We'll see you tomorrow night. Have a good one. Bye.